Hello, welcome to This or That. Today I'm going to be speaking about life insurance and specifically with open enrollment around the corner, a timely topic of whether to do the group life insurance versus getting life insurance outside and separate from your employer. So, first thing we should hit on is why do you even need life insurance? Life insurance for most people, especially the clients I typically see, have families. They either have a significant other or they have significant other and children or some combination of that. And so it's very important to protect the people that rely on your income. And that's really where life insurance comes in. It's supposed to be a replacement for all that lost income that you could have earned. And it becomes less needed as you age and as you start to build up other assets like retirement assets. Maybe you're getting close to paying off your home as you're aging, so life insurance is a little bit less needed. So that's kind of just the high overview on the importance of life insurance and how that typically works. Let's dig into the group life insurance that you may be eligible for. So first off, some employers will actually give that to you for free, and it may not be a whole lot. It may be a set amount at like 20,000 or 50,000. It may be tied to your income, so it may say 50% of your annual salary or 100% of your annual salary. That's typically the most that most employers will do and kind of cover for you 100% and free to you. Then your employer sometimes lets you have the option of purchasing additional coverage, and actually in most situations it's fairly affordable and really cheap to be able to do that. And the biggest downside though is that there's a cap, so they'll only let you go to X times your income, and it depends on your employer, it depends on the insurance company they're associated with, how much they let you increase your life insurance coverage to. So that's one of the biggest downsides, is for most younger families that you may not be able to get all of your life insurance coverage that you need specifically through your employer just because of those caps that you may end up facing. The other thing that I think is really important, especially if you plan to be mobile in your career, is the fact that you lose that employer life insurance coverage if you leave your employer. So that's for any reason. If you quit, if you get fired, you end up losing that life insurance coverage. That may not be as big of an obstacle if you're making a clean break from you accepted a job and you quit a job and you kind of transition fairly quickly there. But what if there is a gap in employment? Then that's when it gets a little bit trickier, because there may be a month or multiple months where you're actually not covered, even though you're planning on earning still for many, many years in the future. But there's a specific period of time where you're not getting that coverage that you may need. So those are the main things to consider with the group life plan. Another benefit to that though is it is super easy. In most situations, you may not have to go through kind of a medical review. But let's dive into now if you were to purchase life insurance on your own. So I'm not going to get into the nitty gritty of term life versus whole life, though I do have strong feelings on that. And I'll actually post a link to one of my blog posts on life insurance coverage for growing families. But yeah, not going to be able to dive into all that detail today. The main thing though is you can get life insurance outside of your group plan, and some of the benefits of doing that is you can get a significantly greater amount possibly, and so that's one of the benefits there. Then also it's not going to be tied to your employment, so you can designate whether you do term and choose the specific years that you want to have coverage for, or you can do a whole life plan which will cover you for the rest of your life basically. So that's one of the benefits, is you can control how long you want that insurance coverage to last. Then the pricing kind of fluctuates depending on what you're trying to cover. And another benefit to that as well is you can easily kind of reduce those coverages over time if you need to. So if you start out in your 30s and you have $1 million in coverage and you get to age 45 and you still have insurance coverage, you can go back to the insurance company and say, you know what, let's reduce that to X amount now because I feel like I can offset the rest with my growing assets, and maybe you pay down your mortgage significantly so you don't need as much coverage. So with that, I think those are the main benefits of getting that life insurance outside of your employer. One of the downsides though that is going to be pretty common that you'll face is it's a longer process. It's not just a button you click and sign up and pay for. A lot of times if you're going to get a significant amount of coverage, you have to go through medical underwriting review, and sometimes that's a nurse coming to your home or work and doing a full kind of run up on blood and weight, and all these different things that they'll run you through the mill on. So that's important to know that it's a little bit lengthier of a process, but it gives you a lot more control over your life insurance needs. So hopefully all that information is helpful. I know open enrollment's coming up, so this will hopefully give you a little bit more information of how to navigate that life insurance portion. And feel free to reach out if you have any additional questions. Again, I will post a link to my blog post, Life Insurance for Growing Families, because I feel that it's an important topic, and I feel that most families just really don't have the proper coverage because they think that their group life plan is enough, and really that may only be covering 1 year or 2 years of lost income. But if you're a young person, and young is relevant, right? So I'm thinking more in terms of where your assets are and the actual insurance coverage you need based on all the years you're going to be working. Really, that's what it comes down to. So it doesn't matter necessarily age or not. It's really that lost income for all those years you could have worked. And so 1 or 2 years worth of coverage is not going to be nearly enough to protect your family. So that's why it's important to review these things and be ready for that when open enrollment opens up for you. Take care and have a great day.